of the real important Magnificent Seven stocks this week with earnings, but we've still got a lot of earnings, a lot of S&P companies going forward next week. Now, in addition to earnings, and again, we're in the heart of earnings season, we're going to get the Fed meeting next week. We're going to get the election. So again, we'll be watching. We're coming back towards support at the 50-period moving averages, where we've got horizontal support there on the S&P 500. Directly below, we're going to be watching to see if we try to bounce off these levels, go back up and fill the gap, either back test or, again, a divergence is still possible. But topping tails on the monthly charts, we'll be watching that closely. That briefly in just a moment. But we're going to get on Tuesday, we'll have the election. And again, that's probably why the Fed moved their meeting, their two-day meeting, to be Wednesday, Thursday. And we're going to get the rate decision and Fed Chair Powell's press conference. After getting the private payrolls coming in over double what the estimate was. I was really surprised to see the number come in so low for the jobs report. The Labor Department reported much weaker number than was expected, which was already supposed to be a weak number, but days before an election, given the overestimating that the Labor Department has been doing with the jobs over the past year and a half or so, given we're days away from an election, I thought that this number would be much higher. But again, they did say that the hurricanes and the flooding impact the number, and maybe, it's a positive number. Maybe it's really negative. Maybe they did fudge the number. Who knows? We'll see. Again, the numbers are constantly overestimated and then revised downward, like this number right here, which I told you was going to be, which will probably still be revised down even more at a later date. But you get these estimates that are off by hundreds of thousands. At one point, it was off by over 800,000 over a 1-year period, and then again that was changed, but they're still way off by hundreds of thousands of jobs in their estimates at the last year or year and a half of data. 12,000 was supposed to come in 110,000, previously 223. I think that was 234. That was revised downward, and we held steady with the unemployment rate at 4.1%. I believe this is the weakest number that we've had since 2020. Again, we had that really good jobs report last month. I told you it was, 254, not 34. It's 254. And they ended up revising it down by 31,000 down to 225,000. We're still going to get another revision. And again, there could be more revisions. From March of 2023 to March of 2024, at that point, between those dates, they were off by 818,000. Now, that news started to break by people that actually pay attention to this stuff, how they were quietly revising numbers down, and that got changed right after that news story broke, and some numbers got revised back up. But still, even with their revisions, which, again, this is probably just a bunch of fake numbers is what it probably is. But even with the revisions from January of 2023, okay, and here we got now October, and we don't know what the revisions are going to be yet for that, but have it up to September, which we've already started seeing more revisions. We have 755,000 jobs overestimated. It's much worse. It started showing up in some headlines, and then all of a sudden we saw magically the numbers be revised upwards, make it not look as bad. Again, I think the numbers are untrustworthy. I'm surprised. And again, I'll tell you this, the 12,000, we very well with the hurricanes and labor strike going on, again, we very well actually had a negative number. Maybe it's just being a smaller, squeaking out a gain of showing a positive number, but it actually could have been a negative number right before a presidential election. So again, with the hurricanes, labor strike going on, it's a nightmare of a jobs report after the previous report that we were told, again, was a wonderful that showed that we're going to have a soft landing and that the Fed made a mistake by cutting too early. And again, the Fed is making this huge mistake. We have recession coming. We're going to base rate cuts off of fake jobs report numbers. We're in serious trouble if we're going to start basing it on these numbers that are proven to be bogus. You can see that right here for yourself. 755,000 jobs since January of 2023 have been overestimated. Quietly revised down later, and again, it was much worse. Who knows what the numbers really are? And this is just either they're doing it on purpose or completely incompetent. You always get, like, remember we had that jobs report last month, and all over social media, this proves we're going to have a soft landing. This proves it. We're not going to have a recession. As goofy as these numbers have been, as off as they have been, they're still positive. Or, maybe this month may not end up being, but they have been positive, even with radical revisions that have been taking place. Markets top on good economic data. They bottom on bad news, bad economic data. With the jobs report is all this proves we're not going to have a recession. Markets top. If you look at the job creation and the unemployment rate and all of it, it was all low at the tops. Like we have a low unemployment rate right now. There was job creation. But then you start moving towards the recession, and either before the recession or with the recession, you start seeing those negative numbers show up, where they start showing up, and the unemployment rate starts soaring higher. It was earnings that gave us the rally on Friday after other earnings earlier in the week rattling the market. The Amazon earnings gave us the rally on Friday. With the jobs report, started to go down a little bit, and then we saw the 10-year Treasury drop on the initial release of the jobs report off of this trend line. Market attempted to rebound back up even further than where futures were at with the Amazon earnings rally. And the 10-year went back up, and we pushed just above that trend line. Again, going into the Fed meeting, we will likely reverse off of this. And again, the market, if we do reverse off of this level, the market can rally as it has a short-term negative correlation with the 10-year. And here it is again. We had sold off. We had turned off of the trend line there. We got a topping tail on Thursday, but then turned down and we bounced off the 10 again. So here we are. And again, we closed just above the trend line there. So again, I'm going to be watching, do we reverse off of this trend line with the Fed meeting next week? We'll be watching that. And short-term correlation is back to negative as the yield has gone higher. We've seen the market go lower, and we peaked out on October 17th. At least so far, we'll be watching to see if that high holds. I'll be watching the gap as we go into next week as well. If we go a little bit lower and bounce off horizontal support or bounce off the levels we're at right now, do we go back, fill the gap, get a lower high, or do we try to make a slightly higher high? We'll be watching. We get a pop and a drop with the presidential race and the Fed, or set up a lower high, or do we try to challenge that peak? Remember, my target is between 5750 and 6,000, so I'm looking for clues. I do believe we're in a topping process, but initially the market did try to rally. More about that time frame and on the intraday charts in my next video. I'll be posting that Sunday morning. I'll try to post it Sunday morning, 7 a.m. Eastern time. If I have it posted then, I'll post it just a little bit later in the afternoon, but I'll try to get that posted by Sunday morning. I have a little bit of a couple of things to do this weekend. I have that up on Sunday morning, 7 a.m. Eastern time. Please support the channel with the link directly below that allows me to be able to provide you this information. Follow the link. It'll take you to a secured site. You can donate any amount you want. I have any sponsors, just a direct relationship with you, but I need to hear from you in order to make it work. So if you like the indicators, if you like the charts, let me know that. In the next video, I'll be sharing with you a bunch of stuff I'm not showing you in this video. Check back for that other video, the trend lines in the daily time frame. Thank you for your consideration in supporting the channel today. We had the Fed cut on September 18th. I've talked about how in 2001, after the 2000 top, we had dropped 19.5%. We got that first cut. We rallied a little bit for 19 sessions, and then the crash resumed. We ended up dropping nearly 51%. That was the bear market. The Fed was cutting because a recession was coming, and the market began to price in the recession. You're going to get the same thing now. Over here in 2007, the Fed cut was associated with the topping process, and it was followed by nearly a 20.5% immediate crash in the following weeks, some bounces, and then again, the bear market was ushered in. That really allowed the top to form. And again, we peaked out after the first initial cut, which we've already had. Currently, here we had the initial cut, and 17 days later, here it was 19 days, and you get a bounce. Here it was 17 days. We had the cut and we rallied for 17 days. Over here, we had the cut, we rallied for 19 sessions, I should say. And then again, the bear market and the crash began. So again, we're using this as a guideline. And again, the herd believes the rate cuts are bullish, and the Fed's going to lower rates and bring back QE, and have bear markets anymore. And again, it's not going to work out that way. That's why we have inflation right now. A good part of the reason is because of all of the Fed policies they did, QE infinity and beyond with that. That has given us the inflation. That's inflationary. The government, passed out 6 trillion in checks. That's inflationary. The government spending right now, it's inflationary. We had supply chain disruptions, but again, tried to help people by passing out these checks, avoid an economic downturn. The Fed tried to help the stock market, and again, it's still going to happen. They've just postponed it for a little while. It's still going to happen, and had they just let it happen, it would have been much better. We're going to see where we are right here. Now, again, 17 days, 19 days, or sessions, I should say, and after the first initial cut, we began to see volatility. Let's see where we're at so far. Now, just quickly, look at the calendar. We had the Fed do the cut on September 18th, okay? 17 sessions, like we got in 2007, would have been on the 11th. I talked about that. I told you it's a guideline. It's not a Nostradamus indicator to predict the day and the hour of the stock market peak. That's not what I'm saying. And again, I told you we could have it be shorter, we could have it go a little bit longer. We still may challenge the high, but we did get a topping tail in the monthly time frame. But we had 17 sessions, and we peaked after the initial cut in 2007. In 2001, it was 19 sessions. It would have been here two sessions after that. What we did right now is, so far, we peaked 21 sessions after the Fed initial cut, and then the following 11 sessions that we've had now to Friday, November 1st, we've had 11 sessions since then. We've had, this full week here, we've had this full week here, and we had that day after. So we've had 11 sessions since we've peaked. We'll be watching to see if that high will hold or not. I told you it very well could be that we peak in a similar manner, in a similar amount of time. And if we cannot make a new high on the S&P 500, then this is very possible. We had that triangle. I told you the triangle could break up. It could break down. I told you I thought it might break up because we got that green awesome oscillator bar on the NASDAQ. That quickly turned right back, and NASDAQ's momentum quickly turned back to bearish. Even though NASDAQ's momentum turned bullish, S&P's could not turn back to bullish. Has the S&P 500 peaked? Well, time will tell. We'll be watching the gap. We've now taken out the trend lines on our rising wedge, the lower boundaries, the two trend lines I've had. So we'll be watching to see what happens. But again, 21 sessions so far has been the peak. So something very, very similar if that high on the S&P ends up holding from just over 2 weeks ago. Something worth paying attention to because we did get a topping tail in the monthly time frame, and we do have other warning. We've got a lot of warning signs there in the monthly and the weekly time frame. But again, week after we had that peak, we sold off, and then we started going sideways a little bit. So people may not if this top does in fact hold, if this high ends up holding, people may not realize that until after. And if we rally back up and we can't make a new high on the S&P, again, they may not realize it until the topping process is complete if we can't make new highs. High does hold, you have a very similar amount of time on your hands that we had that was associated with 2001 and 2007 with the first initial cut from the Fed, which again, in both of those cases were 50 basis points, that the market peaked shortly thereafter. And this time it's done the same thing if, did you hear the word if the high can hold? So we'll be watching. Quickly, up close, 2001, we had already dropped in 2000, having peaked already 19.5%. We rebounded with the Fed rate cuts. And again, 19 sessions later, that was it. And then we resumed the crash. It was the first initial cut in 2001. 19 sessions. 2007, and again, these ushered in bear markets. 2007, we had the first cut. We went higher for 17 sessions. That produced the top. And we turned over the next 5 weeks, five and a half weeks or so. We dropped 20.5%, got the final exit point there, and then crashed to 8%. But it was 17 sessions. So again, I'm watching this closely. Currently, we had the Fed rate cut here, and again had a fake out move with a topping tail, and then we got again pivot rally I warned you would happen. We formed a triangle here. I told you we're still going higher. We did because NASDAQ hadn't filled the gap yet. And then we had this rally and NASDAQ filled the gap. And again, 21 sessions later. So if this high does hold and we just come back and fill the gap over here and end up getting a lower high, then we'll have a very similar amount of time from the first initial rate cut that we did in the last two bear markets. So do keep that in mind. And again, just because everything had seemed so bullish up until we got that big gap lower and pulled off with the earnings this week, and may not realize if the top is in already, could be. We got a topping tail in the monthly time frame at major resistance, and we've hit my target between 5750 and 6000. And I told you we might try to go to, if the triangle had an upward resolution, we might try to go up into the 5900 area. Still may do it if we get a gap and trap right here and bounce off our 50 and bounce off horizontal support. But again, it's just as possible that the top is now in, but we need to see happens with the next rally that we get. Do we bounce off this level in the 50, or do we get further weakness and break these levels? If we bounce, we'll be watching the gap fill. Do we set up another lower high, or even if move back into the trading range of the triangle, do we get a lower high below this peak over here on, what was it, October 17th, I believe? What I'm telling you is that it's very possible that with the divergences on the weekly charts beginning to play out now, and with technical damage being done, it's possible that that was a top and we just may not know it yet. So just food for thought. Again, we're going to be going into the Fed meeting. We're going to have the election. Got still a lot of earnings on the table here so far. We've seen the earnings be a drag on the market. And then we had the volatility, remember, surrounding the yields. Warning you about these negative divergences in the weekly time frame. Looks like they might that they could be starting to play out here. Now, again, need to watch the gap fill. We broke down from the lower boundary trend lines. Do we back test? Divergence is still possible if we back test the first trend line we broke, and again try to go a little higher and test the high and still come back up to this level. But it's very possible that with the topping tail we got in the monthly time frame, that these divergences are now starting to play out. S&P weekly chart for the week last week, we were down about 57 points rounding up. We were down almost 1%, 0.96%. This week, we are down 79 points, down 1.37%. So we've had, last week we were down almost 1%. This week we were down over almost really closer to 1.5%. If we get a rebound, but again, the divergences could be starting to play out. And here we have a triple divergence here, that MACD. The MACD did not roll over in the weekly time frame. It came close to it. We're up by 0.29 on the histogram, which is the difference between the MACD line and the signal line. Again, we could see this roll over, just continue selling and break the support area from the July peak, or if we bounce off of it again, we might do it by the end of next week or shortly thereafter. But again, we'll be watching. Does this high right here hold? And again, the selling pressure that we had during the last 2 weeks of October gave us that topping tail, the monthly time frame. So you're hitting this trend line. You've got these divergences. You've got these negative divergences setting up. The RSI turning down and the MACD starting to roll over towards the signal line gave us a sell-off with those divergences. We had a rally on the monthly chart right here, and again we reversed, and we ended up getting a topping tail here in the monthly time frame on the S&P, on the NASDAQ, and on the Dow. It is very possible that the top is in with a topping tail. Now we got a topping tail over here, but it was not confirmed. We had a sell-off and a rebound, and again the 5-month winning streak continued here with month 4. Okay, which have to be confirmed and then get a follow-through. You can get back-to-back candlesticks, and maybe that's what we have here, kind of a sloppy hanging man candlestick. The Dow has a much better looking one than that, but that now we have this topping tail. As we're going into major resistance, maybe we get back-to-back candlesticks this month. Maybe we rally back up, make a new high, but by the end of the month, again, we're reversing hard. Again, we're looking for a topping process. It can unfold in a couple of different ways, but I'm just saying, hey, look, we get further evidence. It's possible that that October 17th peak, 21 sessions after the Fed pivot, it's possible that that is a top. Maybe we go back to fill the gap and get a lower high and then, resume the decline. It is very possible that that peak holds, exceeded again in the high 5,900 area there, about 100 points above this level. Major trend line of resistance. We're already overthrowing the trend line, excluding the shadow. So again, this is a possible top. October rally and the Fed pivot rally was sold so far. So again, we need to be watching, because again, it is very possible we have something similar to what we had before, that the top is in. Just may not realize it yet. In this topping tail in the monthly time frame, this is the monthly chart. Why I say we still may flirt with the high and go a little bit higher. Again, my target level is up to that high 5,900 area, 5,750 to approximately 6,000. We may see something like this. Look at the topping tail right here at the peak that we had in 2022. In late 2021, we got a topping tail. We went back up. We went slightly above that topping tail. Okay, and we hung in there for another month, and then we went slightly higher, and then reversed by the month of January, and then we sold off hard, and we sold off fast, dropping 15% in a few weeks before getting a rebound and then continuing the slide. Now over here we got a 9-9 signal that produced the reversal in the monthly time frame. Here we've had a 13 followed by a 9, a double sequence count sell signal. Here was a hanging man. Here was a hanging man. And then now we get a topping tail. So again, could we just have already back-to-back kind of reversal? We got a hanging man here, kind of a sloppy one. The second one, we got a 9 count. And again, like I said, sometimes the 9 count, it marks an immediate turn. And other times the 8 bars are high of the count. Other times you go a little bit higher, and we went a little bit higher, and then you turn. And again, good chance we're going to get some kind of sell-off that's going to be really, really ugly, that will eventually take us back down to the low here in 2022. You could be setting up a massive head and shoulders that could eventually take us back below the pandemic lows. That's where it measures to. Again, another reason why I'm looking for a top. Again, I have to make a new high. We may just have that peak hold. It is a topping tail, but I'm just showing you over here. We went a little bit higher. Other times, in history, topping tails have marked tops. That's it. So again, I'll be watching what becomes of all of this here in the monthly time frame. This is telling us we've got total price exhaustion going on. That's what this is telling us. Look at the weekly chart. I talked to you about the 9 count that was setting up in the weekly time frame here at the July peak. Again, we got the 9 count. We went a little bit higher. I told you the NASDAQ had peaked the very next week. I was looking for that top on the NASDAQ to slam into the trend line. S&P diverged with it. I told you I thought that would happen. It did. And the S&P went slightly higher. The NASDAQ got the lower high, and we got the sell-off. Here, again, we got the 9 count. We've gone a little bit higher, and now we're starting to turn. Will this hold as a peak? And the 9 count showing some price exhaustion going on. A 13.9 in the monthly, and we've gone a little bit higher. Here we've had the weekly, and we've gone a little bit higher, but now we're turning, and we're down 1.37% this week. We were down just under 1% the previous week. We're turning down off those levels. Will the highs now hold? Again, the upper channel line, we tagged it, we turned off of it. And in the monthly time frame, we're right in that resistance area between those two trend lines, nearly 100 years old. I told you about the 9 count in the daily time frame, and again, we peaked on October 17th, at least so far, and the very next day we got a 9 count. The 8 bar was a high of the count. We saw divergences form there, and again we were watching, and then as a triangle we sold off a little bit, and then we was that 1% decline, and then we consolidated here of a triangle. The triangle had a downward resolution gapping lower. This gap's likely going to get filled, but we'll be watching. You've got a possible head and shoulders here with either a slanted neckline or if we go a little bit lower. Again, if we don't get a big rally back up, or if we do, if we go back and fill that gap and then come back down and not make a new high, then you've got kind of a lopsided head and shoulders pattern where the right shoulder would be a little bit higher than the left. So just something to pay attention to. If we can move to a new high, you still got a shot at a divergence, and this 9 count would just be a corrective move. Watching, do we get a big election rally that tries to take us above that high, or with earnings or with the Fed, or do we go a little bit lower and then try to rebound to fill the gap, or just immediately try to bounce off the 50-period moving averages and fill the gap, but can't make a new high and doing it, and this high holds? So just some things to be paying attention to. I have a 9 count the day after the peak here, which was on the 18th, October 18th, and we peaked on October 17th, at least so far. Going back to the monthly chart, again, like the Dow here, the Dow is turning off a 125-year trend line. It overthrew it, but then it's turning down off of it. It overthrew it in 1929, then reversed. And here we're getting a topping tail. Here's the previous month as a hanging man. So again, we'll be watching to see what happens. It's pretty oversold as we go into the election. So again, I think you got a good shot. We're going to try to bounce and fill the gaps. The Dow's got those negative diversions in the weekly time frame. The MACD hasn't rolled over yet. Do we keep going, or do we get a rebound back up? We'll be watching. Do we get a lower high if we do rebound back up, or do we try to slam up into the trend line? Again, that's still possible, and we could still sell off by the end of November before the month is ending. But again, just some things to be watching. Really nice parallel looking channel here on the Dow. And again, I talked about the Dow again having those warning signs in the daily time frame, and that did play out here. If it's done yet or not here with the divergences. I got clobbered last week, down 2.68%. This week down 0.15% in the weekly time frame. We sold off, started to sell off, but then again, a candle of indecision. Could be a continuation or a reversal bar to go up and give us a lower high, or even slam up into testing the highs again into the trend line. Again, as we got this topping tail on the S&P 500 right here, we're into that resistance in the monthly time frame. That topping tail is forming as we're coming up into this resistance area. I've got two trend lines. The red one, the lower one, excludes the shadow from 2000, and that's that 5750 area. We've overthrown it. We hit the high 5800 area so far. We overthrew it right around 125 points, I think a little bit more, but in that neighborhood. Okay, including the shadow from 1929 to the 2000 top. Again, it's coming into the high 5900 area. So we're going to be watching. Do we get a big election rally that takes us slightly higher or a lower high, maybe just back testing one of the other trend lines on our rising wedges, which I'll be talking about in the next video. If I just bring it up close, you can see the 2000 top. I have one trend line there excluding the shadow, one including it. If we include it, well, the red one, we've already reached it at 57.50, but we've overthrown it, and we have that other trend line directly overhead. It's coming in. Well, it came in just under for this month. It would have been in the high 5,900. We're with the previous month in October. Right now, if we try to move to a new high, it's right there at 6,000, just overthrowing 6,000. So again, we'll be watching. Just overthrow the red trend line and that's all she wrote, or do we try to get a bigger rally and move towards this trend line? It's highly unlikely that the S&P is going to just continue and try to move above this trend line and again have what we're being told is a brand new bull market, that this was the bear market and it's now over. The bull market never ended. This whole thing is a bull market, and again, it's highly unlikely we're going to clear that trend line and stay above it and have this brand new bull market continue. More likely, we're completing a top of the entire bull market, and that we're going to eventually make our way back to this midpoint here to test the pandemic low. Probably see the S&P peak out and drop, 50 to 60 to 65% or so.